Performance is not in the eye of the beholder. And it's pretty easy to see that some formerly unstoppable stocks have momentarily lost some of their mojo. So on a day where the Dow soared 646 points, S&P advanced 0.21%, but the NASDAQ, where much of tech dwells, declined 0.26%, let's take a hard look at what should be done with beloved stocks that have been stalled. Stocks like Apple, Meta, and Tesla, all of which are up about 10% for the year. Let's start with what the heck is happening with the actual stock market. Today, for example, was a very logical day. Yesterday, the Fed cuts rates. Today, money managers rotated into stocks that will benefit from rate cuts. Makes sense, right? Rational. Even if they had to sell other things to raise money. Things like tech. Sell, sell, sell. First, lower rates spur consumer spending, so naturally the conspicuous consumer stocks are up nicely, starting with the totally discretionary cruise lines. Does that mean more people necessarily called Norwegian Cruise today to book a cruise? No. But if they were thinking of booking a cruise on credit, that just got cheaper. And a lot of what happens with stocks is theoretically based. Hard for you at home, trust me. Second, lower rates spur home building and home buying, and they spur home improvement, which can be financed by a home equity loan. There's a second-day business after a rate cut, so predictably Home Depot was really on the move again, even as I'm sure nothing extraordinary is going to happen there with a quarter-point cut. Still, we own it for the charitable trust. I'm going to talk about it in tomorrow's club meeting, but long story short, I think the despot works here, even if ICE, the immigration police, keep prowling their parking lots looking for people to deport, and that has hurt the stock. I know Home Depot's been doing poorly. Okay, I totally get that. What matters is management just told us that they'd do better if rates came down, and then rates came down. Don't outthink it. Trust them. I do.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.